Alright, what's up everybody? The video you're about to see is another example video of kind of what we do with our elite members video area for our elite members. And I hope you enjoy the video. If you have any questions at all, as usual, tannerstrading@gmail.com, and make sure to like and subscribe the video. I'd really appreciate that. So again, hope you enjoy the video. Alright, what's up everybody? This is a new video for the elite members only video area, and it's the reverse head and shoulders chart pattern and how to trade it. So reverse, sometimes you'll hear people say inverse head and shoulders chart pattern. The reason we're starting with the reverse one instead of the regular head and shoulders is because we are focusing first on how to trade long. When we go into the short trading videos, we will have the regular head and shoulders chart pattern. It'll be really easy for you to understand though after doing this reverse head and shoulders chart pattern. So let's go ahead and jump right into it. So first and foremost, what is a reverse head and shoulders pattern? So the reverse head and shoulders pattern is a pattern used to predict a reversal of a downtrend. Okay, you're focusing on the reversal of a downtrend. It is a bullish pattern and a position long will be taken. Okay, so you're taking a position long hoping the price action continues and reverses upwards. The pattern is identified when the following criteria is met. First, the price falls, makes a low, and then reverses back topside. Then the price falls again, this time lower than the previous low, then rises back towards or near the previous high. The price falls a third time, but not as low as the previous low, then rises back topside. Okay, but that may seem confusing, but as usual, let's use some visual examples so you can see exactly what the reverse head and shoulders is. So here we have a basic candle chart. We have the price over here. We have volume listed down here. And what we see happen is the price falls, reverses back to the top side, sets a high, falls further than the previous low, breaks below this one, sets a low, reverses back top side, sets another, goes back up towards the previous high, at or near the previous high, reverses back downwards, sets a low, not lower than this low however, and then reverses back towards the top side. So you have a few things that have formed. First and foremost, you have the neckline. What the neckline represents is the trend line between the high here, here, and here, okay? These highs here. This neckline isn't always horizontal. Sometimes it'll be slightly slanted one way or the other. An ideal reverse head and shoulders is a horizontal neckline. The next thing you have is the first shoulder. Okay, the left shoulder here. That's this first little dip right here. The next thing you have is the head. What the head represents is the lowest dip. Okay, the head low needs to be lower than both the shoulders, obviously. And the third thing you have is the second shoulder, which is usually roughly or close to that first shoulder in price. Okay, so it's not always going to be exact, but a good amount of the time, an ideal reverse head and shoulders, it'll be roughly as same as this shoulder here. So that's the basics of what a head and shoulder is. Let's look at a few more examples to get it across, or excuse me, reverse head and shoulder. So we look here, we had the dip, the low formed, shoulder one, reverse back topside, didn't break above that previous high really though, reverses again, dips, the head forms, which is lower than the shoulder one, reverses to the top side, dips again, the second shoulder forms, and it reverses back up. Now again, you have the neckline, which is the resistance trend. You have shoulder one, shoulder two, and then the head, which is the absolute low. As I said before, this isn't always perfect. Sometimes you'll get like this, for example, where it comes up, it doesn't go all the way up and touch that resistance, but it does reverse to set that second shoulder. So as with most strategies, we're not looking for this exact setup. It just roughly needs to resemble what we're looking for. Okay, let's look at another example. This is an example of kind of a tilted reverse head and shoulder. It's not always horizontal. Sometimes it can be tilted. So we have what happens here. Price falls, sets a low, reverses upward, so that first shoulder is formed, falls again, sets a lower low, reverses upward,
So the head is formed, and at this point we now have a descending resistance line, falls again, and reverses upward. So the second shoulder is formed. So we have the shoulder, the head, the shoulder, and a descending resistance line. Again, the head low needs to be lower than both of the shoulders. All right, very simple. So the reverse head and shoulder entry levels. What are the entry levels if you were looking to play a reverse head and shoulder? So with the reverse head and shoulder, a few simple entries can be utilized. All right, there isn't one basic entry. Criteria 1. Most commonly, this is the most common entry. Following the formation of the second shoulder, a position long would be taken as the price breaks above the high of the head or neckline, okay, the neckline area. That breaks above that high price. It is not required for 3 or 4 indicators to be in a bottom reversal formation for an entry to be taken. That bottom reversal formation is what we talk about when we're looking for 3 or 4 indicators to be curving off the bottom. That's criteria 1. That's the most common. Criteria 2. You go long as the price reverses topside from the creation of the second shoulder. With this, it is ideal for 3 or 4 indicators to be in a bottom reversal formation to signal an entry. So this would be like a simple bottom reversal. You'd be watching as it comes down after forming the head. You have a rough idea head and shoulders forming. It starts reverse topside. 3 or 4 indicators give you a signal to buy. You could play it long from that reversal. The third criteria for the third entry. Entry occurs after the price breaks through the head neckline resistance, goes up a little, then reverses backwards and bounces off the previous neckline resistance, which would now actually be support. This would be similar to the first entry and is a pure chart-based entry. A position long would be taken at the reversal off the neckline. All right, now this will make a lot more sense once we look at some basic examples here on the next few slides. So we have 3 entries. Let's look at a little chart and kind of spot each of those entries first. Okay, so we have shoulder formed, price goes up, head forms, goes up, nether shoulder forms, and then we have our entry as we break above. See that neckline there? See the neckline here? And again, this is a good example of how they're not always perfect. It doesn't always come down, go back up to that high, come down lower. Sometimes you'll have it fall pretty good, reverse slightly, fall more, and then is really unable to break above that area, so the neckline forms. So again, we have the shoulder, lower low is the head, comes up, isn't really able to break high above that, goes back to the shoulder, so the entry would be taken as we break above what here is an ascending resistance line. A break above that would take an entry, and what we see is a pretty significant run for this play up towards from 24 up towards 25.50. So a nice pop. See, that's a pretty significant breakout pop there. So a very simple entry. Let's go to the next one real quick. We'll go over all 3 of them on this one. Basic bar chart. Price comes down, reverses, goes up, is unable to go topside further, reverses down, so the left shoulder is formed, sets a lower low, reverses topside, so the head is formed, isn't really able to break above that previous resistance much, reverses down, so the neckline has been formed, and then reverses back topside. So let's go over all 3 entry criteria. The first entry, criteria 1, would be taken as you break above this neckline, and you'd be looking to play it topside. The second entry, criteria 2, would be taken as the head price comes up, isn't able to break above that previous resistance much, reverses downward. You'd enter on the reversal and formation of the right shoulder. So you'd enter right down here. Again, with this entry, it is ideal for 3 or 4 indicators to be curving up for you to take that entry, and you would play it back towards the neckline. The third entry, and this is a very common occurrence with the reverse head and shoulders. You see the shoulder form, the head form, the shoulder form, goes up, breaks above the neckline. We have the breakout occurring, runs a little, and then what does it immediately do? Reverses back downwards, and that previous neckline serves, that previous neckline resistance now serves as an area of support, and you'll commonly see it break up, come down, and actually bounce off that neckline. So you have a third entry criteria there as it reverses off that neckline towards the top side. So we have the breakout entry as it breaks above the neckline as one potential entry. We have the right shoulder reversal entry as it comes down and reverses off that right shoulder. And we have the fake breakout reversal entry here as it goes up and ends up pulling back and bounces off that new neckline support for a play topside. So this is another one again. This one labels the breakout entry for us. We see the neckline, shoulder, lower low, head, shoulder. What does it do? Comes up, breaks that neckline resistance, entry can be made, and we see a good run. And what you see and what this chart really points out is most times as we see that breakout, we'll see a significant rush of volume, which really pushes the stock higher. And ideally, that's what you want to see. This one went all the way from 10 to really 11, 11:30 rather quickly. Okay, the reverse head and shoulders, the stop loss. Very important we focus on the stop loss and know exactly what our stop loss is. So when trading the reverse head and shoulder, a few stop losses can be utilized depending on your entry. So if you use criteria 1, okay, if you use that first breakout entry of the neckline resistance, the chart stop loss could be placed at the low of the second shoulder, so at the low of the right shoulder. If that, however, is more than 10% away from your entry and you aren't willing to go beyond that risk-wise, you don't want to risk more than 10%, as usual, a basic 10% stop can always be utilized. So that's the stop for criteria 1. Criteria 2, if you use entry criteria 2, a basic 10% stop would be used. That's when you enter off the reversal of the right shoulder. As usual, it's important to be aware of what supports are below your entry. Okay, we want to be, everything's chart by chart basis. We want to know what supports are below our entry as they can serve as good stop loss exits. If you have a solid support 7% away from your price, go ahead and use that as your stop loss. All right. With this strategy, use a trailing stop once the price breaks above the neckline resistance price and is 3 to 5% above said price. Keep the trailing stop within 5% of price to protect your downside. So as the price moves up, you keep that trailing stop within 5%. So it's just like the cup and handle. Once we break the neckline and are 3 to 5% above it, we move our stop loss up from that right shoulder to the neckline. And as the price rises, we keep it within 5% of our current price. If the price falls, we don't lower the stop loss. It's a trailing stop. It holds solid. And if we get stopped out of the trade, we get stopped out of the trade profitable. And that's what we want. If you use entry criteria 3, the stop would be placed just below the neckline due to the fact if it fails to hold within 3 to 5% of that neckline, the pattern is broken and no longer effective. The trailing stop would be utilized once price is 5% above entry. Okay, so let's look at some examples, quickly get across the stop losses for each criteria. So the first one, the breakout criteria. Criteria 1, we enter as we break this neckline. You have your stop loss would be where? The low of the right shoulder. You could utilize this as a stop loss. If you enter here on this breakout, you could utilize the low of the right shoulder as a stop loss. If that low happens to be 13% away and you don't feel comfortable risking that, utilize a simple 10% stop. Okay, if there's ever a chart stop that is significantly more than 10% away, don't be afraid to use a 10% stop. So you have for the breakout, you have the right shoulder or a 10% stop as your stop loss. Criteria 2, you purchase off the reversal from the right shoulder. The first thing we mentioned was a basic 10% chart stop. Okay, a basic 10% chart stop or next support area. Another thing, when I referred to that next support area, looking at this, what would that actually be? It would be the low of the head. So chart-wise, you could use the low of the head as your stop for criteria 2. So if you buy it off this right shoulder reversal, your stop could be the low price-wise of the head formation. Okay, or 10% if that low happens to be over 10% away from your entry. So we have criteria 1, criteria 2. Let's do criteria 3.
Criteria 3, the stop loss is a little tighter because it's more important the pattern hold. You break above this, goes up, reverses downwards, you purchase off the neckline. You could set your stop 3 to 5% below that previous neckline resistance, which would now be support. So if this was $1, this neckline was $1, you'd set your stop at 95 to 97 cents. Okay, because you want it to hold that rough area. Some would even be even more strict and set it at 98 to 99. It's up to you. Don't go over 5% though with that third criteria, stop loss. So we have the stop losses in play for each of them. We don't need to look at that chart. So the reverse head and shoulders profit target. As with most strategies, it's difficult to set an exact profit target without looking at individual charts. Okay, every chart's different, every support is different, every resistance different. Every chart could have a different, it's not a blatant take 3% or take this or take that. With criteria 1, we would want to first label the closest resistance and use it as our first target, okay? The first thing that needs to be broken is that closest resistance, obviously. With criteria 2, the first target would be the neckline. All right, that's the first thing we want to see broken. With criteria 2, if you enter on that right shoulder reversal, a simple profit target could be that neckline, followed by the next resistance on the chart. With criteria 3, the target would be the same as criteria 1. As usual, however, whenever you can achieve a 7 to 10%, do not be afraid to take that. Okay, if you can get 7 to 10%, don't be afraid to exit early. Doesn't always have to be a chart target resistance-wise. Okay, it's not always going to go right up to resistance. So once you get that 7 to 10%, don't be afraid to take it. As I mentioned in past videos though, intraday, use that trailing stop. If you're at 10%, set a trailing stop at 8%, let it run throughout the day. If it comes down and exits your position, that's fine. You had an 8% win. If it goes up 10%, 13%, raise your trailing stop up, okay? But exit the position before the day closes so you don't have the overnight risk of a downward gap, all right? Okay, reverse head and shoulder, how to find it. So as with most strategies, a lot of the free scanners don't have a specific reverse head and shoulders scan. Finviz though, luckily for us, does in fact have an inverse, as they call it, inverse head and shoulder scanner. But as usual, it's not 100% accurate. Sometimes they do their best to have the technical indicator set up, but every once in a while they're not 100% accurate, so you have to keep that in mind, but it is a great start. As with most though, just like the cup and handle, this is something that you're going to train yourself to really just see as you're doing your scans, or the stocks that you have on watch. You'll start to see them form reverse head and shoulders. But let's go ahead real quickly and jump to Finviz and go over exactly how to do that scan. So you're on finviz.com, you go to Screener. From Screener, let's go ahead and we'll just do as an example, we'll do under 20. This is just an example scan. Current volume, we'll do over 200,000, so hopefully we can pull, we'll go over 100,000 just so we can pull some more examples hopefully. And then let's go to technical. From there, under pattern, if you scroll down to the very bottom, you'll see head and shoulders and head and shoulders inverse. That's the one we're going to click. Only 3 popped up. We'll hit charts. This is more of a difficult pattern for them to identify, so that's why Finviz isn't always 100% accurate. And as you can see here, this INO, kind of a sketchy head and shoulder if I'm being honest, okay, because it set the low, went up, set a high, came down, went up, touched that high, came down, and then broke higher. So realistically, they labeled it incorrectly. This would be the left shoulder, set the head, came down, set the right shoulder here, and then you actually had the breakout occur here. Okay, so this wouldn't be the right shoulder all the way over here. Let's look at STKL. They're labeling this as the left shoulder, sets a high, comes down, makes the head, sets a high, comes down, forms the right shoulder. So this is really a head and shoulder that just never really worked out. SFUN. We have the left shoulder formed here, goes up, sets a high, reverses downward, head forms, reverses up, sets a high, reverses downward,
right shoulder forms, reverses up, breaks the neckline, and sees a run upward. Now, they labeled this one, again, this is important to remember, they labeled it incorrectly. You would have the neckline be from here to here. Okay, let's go to stockcharts.com real quickly and draw this SFUN out so we can visualize it a little better. That's why I'm saying that's why we want to go from FinViz to stock charts, because sometimes they do their best, but occasionally they'll have patterns overlapping. You can see they have a channel that they're trying to draw here as well, so it's somewhat messing with their drawing. Now let me go back a little bit. Let's go ahead and do a year. Okay, this is a annotate. As I said, head and shoulder isn't always perfect. It doesn't just go up and come right down. It sometimes will have phases. It comes down a little bit, pulls up, comes down a little more, goes up, and then sees the drop. So let's go ahead and label this first and foremost. What do we see? What do we have formed here? We have that high at 855. I believe that's the high they set, looks like. Okay. We have the price come down, reverse upward, so shoulders formed. Comes down a little more, sets a low here, so we have low 1 there, first shoulder. Low here, which is the head, reverses upward, comes down, goes up a little more, right near that previous high from the first shoulder, reverses down, sets another low, so the right shoulder has been formed, and then it goes topside. Let's label the neckline real quick. Roughly, you'd have a neckline right about there, and again, you want to focus on that high price, so that 871 price resistance. So we have first shoulder forms here. Let me get rid of these circles and I'll go ahead and draw it in for you. Oops. Shoulder comes down, versus up, comes down, the head forms, versus up, and comes down, the right shoulder forms, and reverses topside. Let's draw on the neckline. The neckline here. So you see the shoulder, head, shoulder, and then we have the breakout occur right here. You can see the breakout occur right there. A play from really 864 all the way up to 1001. Now again, this is a perfect example because what it shows is the shoulders don't always match perfectly. Sometimes the reversal from the first shoulder doesn't go all the way up to that initial resistance, but it will after the head. So they're not always perfect, but when you learn to draw them out like this, they can be visualized a lot better. So that's SFUN. That's a basic example. That's a basic way to do the scan, going to FinViz. Majority of the time, though, when you do your basic horizontal support and resistance scans or things like that, you'll learn to start to spot the reverse head and shoulders on your own. Okay, so in conclusion, the reverse head and shoulders is not a perfect strategy, okay? None of the strategies we use are perfect strategies. Nothing's going to work out 100% of the time. But it can be a nice addition to your trading tool chest going forward. So as always, take profit when you have it and honor your stop loss. I can't say that enough. When you have profit, do not be greedy. Take that 7 to 10% win and keep your stop loss in place. That's what's going to keep you in trading long term, is honoring that stop loss. All right, I hope you enjoyed this video. If you have any questions at all about anything I went over, as usual, send me an email, tannerstrading@gmail.com. I can go a little more in depth with it for you. We can work through some examples. As with other things, if you want to send me some symbols that you think are inverted or reverse head and shoulders, I'll send you back an annotated chart letting you know if you are or are not correct. Or if you have a paid stock chart, you can send me an annotated chart, label things and say, hey, was I correct in this? And I'll give you some feedback on how you're doing. Again, hope you enjoy this video. Have a great day.